What is your near-term forecast for the price of oil? I think you had about $82 in 6 months. Are you still holding that view?
Yeah, absolutely. And the main reason is demand. You know, everybody's talking about US supply growing, which it is, as we expected. But the key surprise is demand. And in the current very strong global economic environment, we think demand can grow at 1.8 million barrels per day. And that will
Coming from where, Michele?
Most of the demand growth will come from emerging markets, which are doing very well at this time. India, China, but also a lot of the producing countries themselves, where the higher oil price incentivizes higher activity and therefore higher consumption. But also in the OECD countries, we see a good outlook for demand, because although efficiency gains continue, actually in a strong economic environment, people tend to upgrade their cars, and therefore net, you actually end up consuming more gasoline.
But Michele, could that change if we see a trade war, retaliations from China towards the US? If it gets uglier, how much will it shave off growth? How much will that hurt demand for oil?
We continue to see a strong GDP environment. We don't think that is going to be hurt by trade. But if we were to see a material slowdown in the global economy, a recession, then yes, that would change and would have an impact on our oil price view. But that's not what we forecast for the next couple of years.
Michele, one of the great issues, and of course I know you don't talk about individual securities, but there's a buoyant, the robust dividend payment by European big oil. Can they sustain that given lower nominal GDP and lower potential GDP growth? Is a 5% dividend an artifact of another time?
I think, Tom, that's a very important question. And I think the sector is completely changing.
Yes.
What is happening today is that even with an oil price of, let's say, between $60 and $70 per barrel, these companies make higher returns, higher free cash flow, and higher earnings than what they did when the oil price was above $100. And the key reason is that we are back to an oligopoly. Back in the 2004 to 2014 period, you had 50 oil companies trying to do mega projects. Today, you are back to what we call the Seven Sisters. 7 big oils being the only companies who can fund and take the technical and political risk to develop mega projects.